channel RV News based on the title VND Revaluation. Could 250 yaud change your life? The script is structured in paragraph form without headings as requested. Welcome back to RV News, your go-to source for real-time updates, analysis, and insights on currency revaluations, economic shifts, and all things related to the Vietnamese Dong, VND, Iraqi dinar, IQD, and other global currencies making headlines. If you're holding on to currency like the VND, or you're just curious about the buzz around this potential financial game changer, you're in the right place. Make sure to hit that subscribe button and turn on notifications so you never miss a critical update. Now let's get into today's burning question. Could just $250 in Vietnamese Dong completely change your financial future? Buckle up, because the answers may surprise you. Over the past several years, we've seen increasing chatter in both online communities and financial circles about the potential revaluation of the Vietnamese Dong. What was once a fringe conversation among niche currency investors has now become a mainstream topic of interest. The reason? The belief that this Southeast Asian currency, currently trading at a very low value against the US dollar, might one day be revalued upward dramatically. If this happens, even a relatively small investment like $250 could turn into a staggering amount of money, perhaps even life-changing wealth. But is this just a dream, or is there solid reasoning behind the speculation? To answer that, we need to understand what currency revaluation actually means. A revaluation is when a country's central bank officially increases the value of its currency relative to other currencies. This is the opposite of devaluation, and it's usually done to reflect stronger economic performance, rising exports, reduced inflation, or increased foreign reserves. So, for the Vietnamese Dong to be revalued significantly, there would have to be concrete shifts in Vietnam's economic landscape, political strategy, and global trade relationships. Many in the RV revaluation community believe these conditions are slowly aligning and that we're inching closer to a global financial reset, one where undervalued currencies like the VND could finally get their moment. Vietnam has been on a strong economic trajectory for more than a decade. Its GDP growth consistently ranks among the highest in Asia, with a young, tech-savvy population, growing manufacturing base, and increasing foreign direct investment. Vietnam has become a magnet for international business. Major companies from the United States, South Korea, Japan, and even China are shifting their manufacturing operations to Vietnam thanks to lower labor costs and a more stable political environment. This China Plus One strategy has been a major catalyst for Vietnam's economic expansion, making the case for a stronger currency over time. Supporters of the VND revaluation theory argue that Vietnam's economy is simply too strong for its currency to remain artificially undervalued forever. They point out that the current exchange rate, hovering around 23,000 to 25,000 VND per US dollar, is not reflective of the country's true economic output. If the currency were to revalue even modestly, say to 5,000 or even 1,000 VND per USD, that would represent a massive gain for those who currently hold Vietnamese Dong. So if you were to exchange $250 for VND at today's rates, you'd receive about 5.7 million to 6.2 million Dong. Should the currency revalue to 1,000 VND per USD, your holdings would suddenly be worth $6,000. If it revalued to 100 VND per USD, that could mean $60,000, and that's the dream, isn't it? But let's talk reality for a moment. What would it actually take for such a revaluation to occur? First and foremost, the Vietnamese government and central bank would need to make a policy decision that it is in the country's best interest. That's a big if. While Vietnam's economy is growing, the government has been cautious about any abrupt changes to its monetary policy. They prefer gradual adjustments, often to maintain export competitiveness. A stronger currency could make Vietnamese goods more expensive overseas, hurting the export sector, which is a key driver of the economy. However, some believe this could change if Vietnam becomes more consumer-driven domestically, or if it joins a larger, coordinated global currency realignment. There's also increasing pressure from global institutions for countries to maintain fair currency valuations. The International Monetary Fund, IMF, and World Bank have frequently encouraged transparency and accuracy in how countries manage their currencies. If Vietnam were to move toward a more open financial market, it might also be pushed to allow its currency to float more freely or adopt a new exchange rate regime. Some members of the RV community go a step further and tie the VND revaluation to larger geopolitical moves. They speculate that we're heading toward a massive global financial reset driven by international monetary reform, digital currencies, and a realignment of economic power from the West to the East. In such a scenario, undervalued currencies like the VND and IQD could be revalued as part of a reset designed to balance global debt and wealth distribution. While this sounds like science fiction to some, others view it as a slow-moving but inevitable shift. Another important aspect to consider is the role of banking institutions. While major banks like Chase, Wells Fargo, and Bank of America don't publicly comment on future revaluations of foreign currencies, some in the RV world claim to have seen internal memos or private rate sheets suggesting that banks are preparing for such events. Whether or not those claims are true is still up for debate. What is true is that many banks do facilitate foreign currency exchanges, and the VND is commonly available through online platforms, currency dealers, and some retail bank branches. The infrastructure for a currency shift is already in place should the rates ever change. Now let's circle back to the question that started this conversation. Could $250 in VND change your life? Mathematically speaking, yes, it could if the revaluation happens and the rate increases dramatically. Let us look at a few scenarios to understand the possibilities. Suppose you purchase $250 worth of VND today at a rate of $24,000 VND per USD. That gives you 6 million Dong. Now, let's say the VND revalues to 1,000 per dollar. That 6 million Dong would be worth $6,000 at 24x return. If it revalues to 100 per dollar, that's $60,000 in a hyper-bullish scenario where it goes to parity, 1 VND Rash 1 USD. That same $250 would turn into $6 million. That's the kind of return that turns dreams into viral YouTube videos, no doubt about it. But these scenarios are highly speculative. Let's be honest. The odds of the Dong revaluing to 1-to-1 with the dollar are extremely low in the short term. That kind of move would disrupt Vietnam's economy in ways that are hard to imagine. Even a revaluation to 1,000 VND per USD would be considered a monumental change. For a revaluation to be successful, it must be backed by real economic strength, political stability, and a credible plan for long-term monetary control. Otherwise, it risks inflation, capital flight, or worse. That being said, even modest gains can be significant. A revaluation to 10,000 VND per USD would still represent a 2.5x return on your money. And if you've only invested $250, the downside risk is relatively low. That's part of what makes VND such an attractive speculative play for many investors. You're not risking your life savings, you're putting a small amount on what could be a once-in-a-generation event. And let's not underestimate the power of hope. For many people, especially those struggling financially, the idea that $250 could one day blossom into tens of thousands or even millions is more than just an investment strategy. It's a form of optimism, a belief in the possibility of change. But as with any investment, especially speculative ones, it's critical to do your research, stay grounded, and avoid falling for hype or scams. The RV world is full of misinformation, fake gurus, and wild predictions. Be skeptical of anyone promising guaranteed returns or insider knowledge. Stick to reputable sources, follow economic trends, and always ask yourself, what's the real likelihood of this happening? And am I okay if it doesn't? We've also seen that the VND has been relatively stable in the Forex market, unlike some currencies that experience wild swings. The Dong has been carefully managed by the Vietnamese central bank. This could be seen as a good thing, reflecting stability and fiscal discipline, but it also means that dramatic shifts in the exchange rate are unlikely without a clear policy change. So if you're investing in VND, patience is key. This isn't a get-rich-quick scheme. It's more like a wait-and-see scenario. For those willing to wait, the potential upside remains one of the most talked about in the currency world. So could $250 in Vietnamese Dong really change your life? The answer is, it depends. If the revaluation happens and happens in a significant way, then yes, it absolutely could. It could provide a financial windfall, help pay off debt, fund a new business, or even allow for early retirement. But if it doesn't happen, you're still left with a unique souvenir, a small financial loss, and hopefully a lesson in macroeconomics and risk management. Either way, the key is to stay informed, stay realistic, and never invest more than you can afford to lose. At RV News, we'll continue to bring you the latest updates, expert opinions, and market signals so you can make educated decisions in this ever-evolving space. Whether you're new to the RV world or you've been holding VND for years, know that you're